Hello, everybody. Happy Wednesday. I'm Katie Talati, Director of Research at Arca. I'm responsible for analyzing digital asset and blockchain opportunities at Arca's funds. As part of our research, my team and I examined token prices and the market events that act as catalysts for price shifts. Based on our research and market events over the past week, we wanted to share some of those token price movements and what we think drove those moves. In this segment, what's driving token prices? So, as a reminder before we get started, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. All right, so let's get started this week. Definitely on the quieter side versus other weeks, but to start, we have Ronin. Ronin, which you may remember I spoke about previously, it's the Axie Infinity sidechain. They actually suffered a hack of over $600 million a few weeks ago, and they recently identified the culprits of this hack. The US Treasury actually believes that the North Korean hacker group Lazarus is behind the exploit. The Lazarus group has been linked to 7 hacks in the last year in digital assets, and they've actually first gained notoriety for the Sony Pictures hack of 2014. That was a throwback. As a result, the Ronin token is down 8.7% week over week. Next up, we have Anchor. So Anchor is Terra's lend borrow protocol. It gained a lot of popularity as it was offering 20% APR or APY on depositing UST, which is Terra's stablecoin. This week, Anchor passed a proposal to redirect intended airdrop allocations to the community pool. Though this is intended to stabilize the price of Anchor and serve as a better purpose for Anchor bootstrapping, new collateral onboarding, we're unsure it will do much given the same quantity of Anchor tokens will still be set to hit circulation. So part of offering that 20% APR is that unfortunately it has meant that Anchor is considered a farming token. And so that means that a lot of the time people receive it from staking or depositing their UST, and they're immediately selling it. And so Anchor is, kind of unable to hold its value since there's just so many extra Anchor tokens floating out there. So Anchor is only down 1.6% on the week on that. All right, next up we have Compound. So Compound has a proposal up for vote on whether to discontinue the protocol's liquidity mining program. So for those who aren't familiar with Compound, Compound is is a lend borrow protocol on Ethereum. It's one of the first DeFi protocols actually to issue tokens through liquidity mining, and the purpose of the token is a governance token, also the first of its kind to do that. So Compound is actually, a lot of people credit it with kicking off DeFi summer, the liquidity mining craze, where, if you deposited and used a DeFi protocol, you would get the protocol's tokens in response or as a reward. And so, a lot of people have been, obviously big fans of this model. It definitely kicked off, I would say, like a flurry of activity within decentralized finance and definitely put it on the map, increasing TVL and all kinds of things. But, Compound specifically has been criticized quite a bit. The program has, in a sense, artificially inflated its TVL numbers, and a lot of people have been doing recursive lending, lending out their assets and then going back and borrowing them in order to capture these rewards. So we really do think it'll be interesting to see the impact of discontinuing this rewards program, since it'll be one of the first major protocols to do so. As of now, the vote is in favor of discontinuing the liquidity mining. However, we will see when the vote closes in another day. Compound is up 11% week over week on this. All right, finally, we have something called Stepin. So for those of you who have not been following this crazy trend, Stepin, whose token is called GMT. So this is part of the really popular move to earn movement. So it's an app. It's built on Solana. And the idea is that users sign up and they're essentially getting rewarded in Stepin's token called GST for walking or running or doing any kind of like form of movement. And then users can then use that GST token for stuff within the app. So like upgrading their sneakers, in-app purchases, all kinds of things. And there's also a GMT token, which is like a governance token, but the team hasn't put out any specific use cases so far. This week, Stepin actually announced a collaboration with ASICS for Stepin ASICS NFT sneakers that are going to be available for purchase on Binance's NFT marketplace. The Stepin app, has actually also amassed, as of last week or as of earlier this week, 300,000 daily active users that are all looking to earn rewards for walking and other movements throughout the day. So pretty impressive for an app within digital assets to have 300,000 daily active users. Just by comparison, some of the top decentralized exchanges see somewhere in the teens, or somewhere in the like 15 to 20,000 daily active users range. 300,000, very impressive for digital assets. So we'll be watching this one to see what the adoption and growth story is. All right. That's all I have for you guys this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.